Hey guys, it's Gold Streams here. So today I want to talk about managing risk and how managing risk will keep you alive in the markets for the long run. So the trade was taken on the 15th of January, pre-London trade. Okay, as you can see, gold came down, the gold came up, it came back down, it created support, and we had a 30-minute close bullish above support with a lot of clean range all the way up to 26.87. The first entry was taken based on the 15-minute time frame. So the 15-minute time frame is a good indicator. It allows you to take earlier entries if you see the right setups, if you know what you're doing. So the first entry was taken once the 15-minute time frame created a support, and the next 15-minute candle came up and broke the previous high of the 15-minute candle. Second entry was taken as the 30-minute closed bullish, and this 30-minute candle then came up, well, first came down, made a lower wick, and then came up and broke the previous high. It was a significant break as it broke the wicks to the left. We had clean range all the way up to 26.87. And obviously it was the 1 hour high that was broken, as well as the 30-minute high that was broken. Okay, the one thing obviously, and the point of this video is just to show how risk can be managed. So right now I've got about 2.5% risk in the market. Okay, and I'm completely comfortable with that because there's been wins on this week. It's Wednesday, it's midweek. I'm always willing to risk a little bit more on Wednesday because I know how the market moves. On a Wednesday, there's a lot of volume, and you tend to get bigger moves towards Wednesdays, Thursdays. So completely fine. Now, understand that we've already made money in the market on a Monday, on a Tuesday. Wednesday comes along, you see a position like this, a lot of bullish momentum on gold, came down, created support. You're expecting it to continue bullish, right? Now, keep an eye on this particular candle that's moving up. Now, once this candle comes up and it breaks its own high, is where I manage risk, right? Is where I'm very, very cautious, okay? Because you have to be a cautious trader. The only way you're going to last long in trading and you're actually going to be profitable is managing risk. It's not being emotional. It's understanding that if the market comes up, breaks the high, you don't expect it to come down and break its own low. Okay. So while the candle is moving, I'm constantly just waiting for the high to be broken, just so I can start moving my stop losses and have less risk in this actual trade. So there you go. The first stop loss was moved to break even. Second stop loss was moved to the bottom of this trade, of this candle, right? I'm expecting gold to keep moving up. It's got no business coming back down in this zone, and it's definitely got no business coming back down and breaking its own low. So this is risk management. Now I've got one position completely risk free, and the second position I've got 1% risk now. All right, now it's a much easier trade to hold, and I'm waiting for the candle to come up or the market to come up in general and fill at least around 50 to 70% of this range that's available on the left, to the left hand side. And that's it. It's a waiting game. You can see here the entry on the 15-minute time frame, and exactly how it was taken, the 15-minute market structure. I'm expecting this 15-minute candle to close above the previous candles, which it did. So there's no reason for me to be hasty and over manage the trade now. I've already managed the risk, so now it's for me just to sit back and watch this play out. Keep an eye on the time down here as well. You can see that you've got 12 minutes left for this candle to close. And in 12 minutes after this candle closes, London open is the next candle. Now, candle came down, hit break even on the first trade, means it broke its own low on the 15-minute candle, and it's come down and it's, like I said, it's hit break even. Now this second stop loss is based below this 30-minute wick, this 30-minute candle, for two reasons. Like I mentioned, this candle has no business coming down and breaking its own low, and that's also the low on the 15-minute time frame. That's also the previous low. For candles, for the market to continue an uptrend, it means it has to create higher highs and higher lows. If it starts breaking that structure of higher highs, higher lows, then you can say that the trend is broken. You can see here that exactly what I mean with the 15-minute time frame. And now I finished the trade. I finished the day. I'm not interested in taking any more trades. I had a really good setup. I had a really good plan, and I knew what I was looking for. The market didn't do what I expected it to do. I had about 2.5% risk in the trade. I ended up losing 1%, so one loss and one break even. I'm now just watching this candle and seeing what it does out of curiosity. I'm not looking to take any more entries. I'm not looking to sort of risk any more in the market. Yes, I can potentially risk another 1% because 2% is my max risk for the day. It's not something that I want to be doing. It's a simple matter of fact of just watching just to see what would have happened, right? If you stayed in the trade, for example, if you didn't move your stop loss, if it would have hit the previous stop loss, so you can study the move. You can study if it was too hasty with your stop loss, if the market does reverse completely, if it just comes down and tests the support again and then goes back up. This is why even after you take a trade, you need to be able to control your emotions and just sit back and watch the market and see what the market does. Okay, there you go. So that would have hit my stop loss. Both trades, I would have ended up losing 2.5% of my account, which is, a much worse feeling than losing just 1% in the market. So this is where you can sort of take note and be like, okay, that was a very good risk management strategy. I'm glad I did that. And when you come back the next day to trade, you're a lot more confident because managing risk is what's going to keep you in this game for the long run. It's easy to control emotions. It's easy to walk away from the charts after a win. It's much more difficult after a loss, and especially after a big loss. So the worst thing you want to be doing here is trying to take another entry, right? You don't want to be taking any sells. You don't want to be taking any buys. My philosophy is if I lose a trade, then I wait for that candle to close. Once that candle closes, if I see a possible opportunity for an entry, and that's to re-enter sort of the position that I had previously, so keeping the same bias, I will. If I don't see that, then call it a day. But thank you very much, guys. Look forward to doing the next video.